speak to property investors all the time who are looking to find off-market opportunities or pre-market opportunities. So in today's video, I'm going to explain exactly how you can go out there and build a property portfolio filled with off-market opportunities, or if you're looking for a property at the moment, how you can actually find them in today's market. The first thing I wanted to touch on is what an off-market opportunity looks like. So that is basically a property that never gets on realestate.com or domain.com.au. It's a property that only you have access to, that the wider public doesn't have access to. So it's the type of property that not everybody gets to see, and because of that, there can be a buying advantage for you personally, which I bought a number of properties off market, and I love buying that way because I don't have to compete with other people. I don't have to work through the standard real estate channels in terms of going back and forth negotiating wise, and it can be a really nice way to pick up great assets at really, really good prices. So as we all know, there's a real estate cycle in play. Now, whether you want to acknowledge that and learn from that or not is completely your call, but basically in real estate, prices can go flat, they can go up, and they can always or go backwards and decline in value as well. So it's really important to understand how off-market opportunities play into those different stages of the cycle. Now, let's go back to Sydney and Melbourne in 2014 to 2017, when those markets were going up very, very quickly in value. Because it was a hot market and because prices were increasing rapidly, there weren't a lot of off-market opportunities to be had, because everybody knew that they could go find a real estate agent, that they could put that property online within 1 to 2 weeks, get a lot of inquiry and some offers, and sell for a premium at that time. But if we look at Sydney sort of between maybe 2008 and 2012, when prices didn't really do too much, there are a lot more opportunities during that flatter period of the marketplace to get off-market listings. So it really depends on the stage of the property cycle. The best time to be buying off-market listings is when prices are declining, when we're in a recession, or when we're in a depression, or if we're in a flat marketplace and the marketplace has stayed stagnant or flat for a period of time. So generally these markets where there's more financial hardship for people, or more people are forced to sell, or there's more property available on the open marketplace and that property sitting on there for longer, is when you can really snag some of those opportunities. So there would be some good off-market opportunities at the moment in Perth, for example, where the market is still going backwards. Probably the same with Darwin, probably the same with Sydney, and maybe 6 to 12 months from now, Melbourne as well, because not everybody's going to want to go to the open marketplace where they know prices are going backwards in those areas right now, and therefore there might be a buying opportunity to build a relationship with an agent or a solicitor and find one that nobody else gets access to. Now, I'll give you a couple of examples. We've got a couple of developers that we know in Brisbane that we've worked with that don't bring properties to the open market. They bring properties directly to us, and then we introduce those properties to clients. And we've also got some really, really tight relationships or solid relationships in the Sunshine Coast and Brisbane, where because we've been buying off the same agents for so many years now, those agents think about us and our clients first, and therefore, you know, maybe 40% of the properties that we buy never go on realestate.com or never go to the open marketplace. And that gives us a huge advantage to negotiate a great price, and obviously the person buying the property a big advantage, because they're not playing that game against somebody else who artificially jacks up the price of the property. So let's talk about how you can find these off-market opportunities. The first and easiest way, if you're looking to buy yourself, is through a local real estate agent. Now, generally the rule of thumb in Australia is the 3 top performing agents in any suburb in Australia will be selling at least 80, if not 90% of the property. Now, the way to find who these 3 top performing agents actually are is to jump on openagent.com.au or ratemyagent.com.au and type in the suburb that you're looking to buy in. And then from there, you will be able to start filtering based on who the top agents are, based on highest number of sales, based on most transactions in the last 12 months, based on highest value of properties, based on type of property. And you can really start to dissect the market and identify who's who in the zoo so that you can start to build relationships with the right agents that are doing the volume. There's no point building a relationship with the agent down the street that's doing just 5 sales a year. You really want it to be that guy that's doing 15, 20, 50 sales a year, because they're the ones that are hungry, they're the ones that are making it happen, they're the ones that have all of the next lot of listings coming up as well. So after you've identified the suburb and the agents, what I do then is identify what it is that I'm looking for as an investor. So I'm looking for a big piece of land in the suburb with a nice home on it, in the most expensive pocket, in a nice quiet street, etc, etc, whatever's important to you personally. And then I write out a list and I send that list to those local agents via email. And then what I do is I give them a call and go and arrange a time to catch up, and I go and learn a little bit about them and their business, and then I tell them exactly what I'm looking for. Now, if it was that easy, you know, to just do that, everybody would go out there and do that. But what I find from there is, after you've built the relationship, told them what you're looking for, every single week from then forward, I start giving them a call and just say, you know, "G'day John, Ben here from Pumped On Property. Just wanting to know if you found any properties at the moment or have any new listings coming up over the next month that fit this criteria." And every single week you're educating them on what you want a little bit more, until the point where they go, "Man, this guy's just not going to go away. I better find something." Or, "This guy's very, very serious. He's a great buyer. He's pre-approved for finance and ready to go. I'm going to go find him exactly what he's looking for." So that is the way that you do it with local agents. You build a really good relationship. You tell them exactly what you're looking for, and then you touch base with them once or twice a week until they find it. So we've found that that is a way that we've been able to buy 40% of the last maybe 600 properties we bought for our clients through that particular channel. And that can be a really, really powerful way to get a relationship going, as well as an off-market opportunity coming your way. Now, the second way in terms of doing it yourself, which is a little bit harder, is identifying which suburb you want to buy in, and then getting out on there on the street and going and door knocking and just asking people, say, "You're looking to buy in the area. I'd like to potentially have a look at buying your house. Would you be interested in?" Now, that's a really, really difficult way of doing it, but some of you watching this have a lot of time up your sleeve, and it can be a very, very effective way of finding an off-market opportunity, or, you know, finding that person who doesn't want to pay $30,000 in commission and marketing fees to an agent, and getting that property that looks the way that you want it to look for yourself. So it can be a great way of saving yourself some money and really finding an absolutely cracking property. You know, it's a great way to find a renovator, a great way to find a subdivision site, and you can do a lot of research before you go and just knock on every single home to know what it is that you're looking for too. Now, another way, I was actually at a property event in Brisbane a couple of weeks back, and there was a guy there. He basically sent out 100 letters a week to homeowners in one very specific suburb in Brisbane, basically saying, "G'day," he was looking for subdivision sites. "G'day, my name's John. I'm looking to go and find a subdivision site. I was wondering if you'd be interested in selling in the next 12 months. And he said out of 100 letters that he sent, 3 people would respond, and maybe one of those sites would be viable for him. And at any point in time, he was doing sort of 1 to 3 of these sites per year, and he'd been able to replace his current annual salary and leave work and just do that full time from doing that. So, you know, whether it's door knocking or whether it's letterbox dropping, you know, his strategy was 100 letters a week times 50 weeks a year. You will find 1 to 3 really good sites. So, you know, going and building relationships with agents, so it's not just you looking, it's other people looking, is probably an easier way. But if you're really, really motivated and looking for something very specific, door knocking or letterbox dropping can be a cool way to do it too. Now, my third favorite way of getting off-market opportunities is to go directly to the source. Now, one of those ways is through the state government. You see, because prices have risen so dramatically in so many parts of Victoria, Queensland and New South Wales in the last 15 years, and governments are constantly looking to raise revenue and extra dollars, the governments periodically sell off properties in really high quality suburbs at really, really competitive prices. So Generally what happens is the state government in an area makes a relationship with one local agent, and you can find that out pretty easily. It's generally one of the top 3 agents in the area, and you can just call up those agents and say, who is selling the state government properties in this local area? Now, the reason I like the state government properties is because you have to buy them without being able to have a building and pest clause in the contract or a meaningful finance clause, which means it deters a lot of normal people, mums and dads, that would go after that type of property at that price because they don't feel comfortable buying without a building and pest. They don't feel comfortable buying with auction style terms without a finance clause. So I've bought a bunch of properties for our clients directly from the Queensland and New South Wales state governments, and they are always well below market value because the state government's incentive is to just move on the property. You've got to remember that they basically paid nothing for it back in the day, and so if they're selling it for 400 grand or 800k, there's a huge and immediate gain for the state government from that perspective doing that. And you'll find clusters of areas that the state government is actively looking to move properties out of, and I think the state government can be a huge partner for you, especially if you identify that local agent who represents them. And generally what happens is one local agent will get the tender or the chance to work for the government and all of their listings for about a year, and then the government will go back to the open market, look at all the local agents again, and then maybe select a new one just to keep it fair. So if you've also got the right agent working for you, they'll let you know when state government properties are coming up. They'll feed them through to you well before they actually get the listing, and then they will support you with the process of making that happen. So huge opportunity there, and I've been able to save clients $30,000, $50,000 in the past from just buying off the government that way. Now, that's not in every marketplace. You know, now that the marketplaces in Queensland are in the rising stage and starting to get some traction, less of those properties sell for a discount because everybody is looking. But, you know, in New South Wales, Wollongong, for example, Central Coast, there could be great opportunities around that type of product in the next few years. Another one is the public trustee. Now, the public trustee represents a huge number of different people, but the one thing that all of those people have in common is the property is a distressed asset sale. So it could be sold because somebody's business is going bankrupt. It could be because an individual is going bankrupt. It could be because somebody has died and the family needs to move the property, or that there was nobody in the family to sell the property and therefore it's going straight back to the government or the charity as per the nominated deceased estate will. Or it could even be through like a really, really messy divorce type thing. So the public trustee is a really, really cool way of finding really distressed properties, and in every state in Australia there's generally a public trustee website where you can pay a small subscription fee generally and get access to all of those properties. Now, most of them sell during auction terms, or in fact almost all of them sell at auction, but a lot of those properties that go to auction pass in. So again, it can be a really, really good way of identifying properties where there's some sort of distress. So buying off the public trustee can be a really nice way of finding something off market from a very distressed seller, and can be used to your advantage at the right time of the cycle. Now, the last one only really becomes available during a recession or a depression, and that is when, you know, unfortunately unemployment rates rise, costs of interest rise effectively, and people are forced to sell their properties. And this comes through about once every sort of 7 to 10 years, according to some people. To some other people, like Phil Anderson and Fred Harrison, it comes through about once every 14 to 18 years. So depending on which cycle you're looking at, what happens is people can't afford to pay their home loans anymore. The banks effectively, and the solicitors working for the bank, look to offload those properties on their balance sheets. Now, why buying directly off a bank or a solicitor can be a huge opportunity to buy an off-market property during a recession or depression or period of time when, you know, interest rates go up dramatically and some people are forced to sell, is because, let's say I'm a homeowner, I've been diligently paying off principal and interest repayments for the last 10 years. I've also put a deposit down when I bought. I'm effectively in a position where the house is worth $500K, but I only owe the bank $300,000. Now, if I'm in a position where I'm forced to sell that property at that time, it can really mean that the bank effectively, to break even, just needs to get its $300,000 back. Now, this doesn't happen all the time, but when people are forced to sell in a recession or depression, when no one can go out there and borrow money, the bank will actually sell a property that's worth $500K for the $300,000 or even less, just to wipe the debt off its balance sheet that they're not getting money back on, and to move the property on. And this happened in Australia in the last global financial crisis. It will definitely happen in the next one. If anyone's seen $1 Million Listing New York, there was a group of 3 solicitors in New York City that bought up 100 mansions in Brooklyn. And then sort of 6-7 years later, when $1 Million Listing show was being shot, they were renovating all of these properties that they'd bought off the banks and off the public trustee and off people that could no longer afford to make the repayments. And they'd held them while the prices had gone up sort of the same as Sydney, 60-70%. They were renovating them, and now just at the top of that cycle, they were sort of exiting out about 2016-17. So really interesting way to buy off-market properties well below market value, but that opportunity only comes around once every blue moon to the average person. But because you're a smarter investor than that, you know that there is a cycle and that you can time that cycle as well if you look back at your history properly. So there's some of the ideas I've got around finding off-market properties. You can talk to local agents, you can door knock, you can go out there and you can drop letters. You can talk to the state government, you can talk to the public trustee, and in the recessions and depressions, maybe you can use a combination of those strategies to get access to really, really good properties at great prices. Now, I'll give you another example of this in practice. In 2007 or 2008, 1 in every 3 properties in Noosa, which is a beautiful holiday place on the Sunshine Coast in Queensland, was being sold by either the public trustee or by a solicitor on behalf of the bank, so mortgagee in possession. And what was happening is that properties that were selling in 2005 for $3 million were being resold in 2008 and 2009, in some instances on the water there at Noosa, for as low as $700,000. Now, not everybody, in fact, most people don't have money to play with during a recession, but if you do, they're the types of opportunities available. Now, I've seen one of those properties that was picked up for $700K in 2008 just resell now for $5 million because the marketplace has come back again. So really interesting to understand this stuff and how to use it to your advantage. I hope you've got a bit of value out of this video, and if you'd like to keep this conversation going, please subscribe to our YouTube channel. If there's another video you'd like me to record, please put it in the comment section below, and good luck with your investing.